Good morning, everyone. Thank you for joining us. My name is Mari-Liis Miia-Topp, and the results for the third quarter and for the 9 months of 2019 will be introduced by the CEO of Kapital, Paolo Michelozzi, and Angelika Annus, the CFO. We'll answer questions after the presentation, and this presentation will be recorded and later available on our webpage procapital.com and on the Nasdaq Baltic YouTube channel. We will start with the business highlights, and after which Angelika will give you an update on the finances. I will now hand over to Paolo.
Yes, good morning on my part as well, and thank you for joining us. I will highlight the most important from business side, and will give an operational update after Angelika has taken you through the Q3 and 9-month financial result. We have achieved several significant milestones within the 9 months of 2019. Firstly, we have received the building permit for Kalarana Quarter and have signed the agreement with Nordecom for the construction of the first 2 phases. The design and the construction work will be carried out in smaller stages, and it is planned to start as soon as possible. The completion of the project is currently scheduled for end of 2021. The value of the contract with Nordecom is 4.5 million plus VAT, and the project is confirmed to be financed by LHV Bank. In Riga, our sales revenue during 9 months of 2019 is a little over 7 million, including VAT, for 7 luxury residences, which is continuous one of the strongest result in Riga premium segment. Another great achievement is that only recently River Breeze Residences were recognized with the 2019 Architectural Award, which is very prestigious architectural award in Latvia. In Vilnius, we have completed 5 new premium apartment houses in Šaltinių namai Attico development. This is one of the first development in Lithuania that are recognized with A++ energy certificate. I would briefly stop on the result of T1 as well. In early November 2019, the T1 Mall of Tallinn celebrates the first year of operation, which has indeed been slower than we had anticipated in the initial prognosis. The result of T1 has had a negative impact on the group financial result with lower operating profit and net result, and have challenged the group cash flows. We are considering different options to reduce the financial cost of the T1 Mall of Tallinn. However, I would like to stress that the development of T1 Mall of Tallinn should not be seen. The lifetime of the shopping and entertainment mall is a long and continuously evolving journey. We are currently focused on finding the best mix of tenants and increase the rental revenue that have increased the T1's long-term value. The number of visitors is significant and incline. Our customers very much value the entertainment that can be found in T1. We foresee a continuous increase of revenue during the period due to the fact of the entertainment. And now I will hand you over Angelika, who will share some details on the financial results.
Thank you, Paolo, and thank you, listeners, for joining us. 2019 has been quite an extraordinary year. We have closed 9 months with 37.3 million euros total revenue, which is an increase of 77% compared to 21 million euros during the same period in 2018. The revenues of the third quarter increased by almost 9 million euros, which is an increase of 147% comparing to the same period last year. Gross profit of 9 months has increased by 70%, constituting 11.7 million euros, comparing to 6.9 million euros last year. Gross profit of the third quarter increased by 1.7 million euros, which is an increase of 92%. Net result, though, of 9 months remained negative. The bottom line of 2019 is influenced by significant interest cost of investment loan related to a T1 property. Interest costs were capitalized into investment property until end of 2018, and therefore did not have effect to the profit and loss statement during comparable periods. Revenues have increased in real estate sales and rental activities. The real estate sales revenues are recorded at the moment of signing notary deeds and handing over premises to the buyers. Therefore, the revenues from sales of real estate of the company depend on the completion of the residential developments. What is very important in 2019 is completion of Vilnius project, which has significantly contributed to our real estate sales revenues. Operating profit of 9 months in 2019 was 6.9 million euros compared to 4.8 million euros during the same period in 2018. In the third quarter, the operating profit was 1.8 million comparing to 300,000 in 2018. Marketing expenses have decreased by 31% in 2019, while administrative costs have increased by 7%. Financial expense related again to the investment loan of T1 mentioned before. 6.9 million euros interest were recorded during the first 9 months and 3.4 million of them in the third quarter in relation to this loan. The net result of 9 months was 3 million euros loss comparing to 2.2 million euros profit during the same period in 2018. The net result of the third quarter was 2.8 million loss comparing to half million euros loss in 2018. AS Pro Kapital Grupp has operations in 4 geographical segments: Estonia, Latvia, Lithuania, and Germany. We also monitor our operations through business activities which are real estate sales, rental activities, hotel operations, and maintenance. In Estonian segment, real estate sales of 6.7 million euros have decreased by 3.2 million euros comparing to the last year. Last year's revenues were driven by completion of Marsi 6 project and 2 apartment buildings of Kristina Houses project in Kristiine City. This year, we have completed 1 apartment building of Kristina Houses project in Kristiine City during 9 months, and we have been selling available inventory. The final 3 buildings of Kristina Houses project are being under completion as we are speaking, and before the end, they will be finally completed. Rental revenues are generated by T1 Mall of Tallinn, which started operations in November 2018. Maintenance revenues have decreased significantly comparing to last year. This is due to the company's decision to stop maintaining premises which are not related to our current or future developments and to hand those premises over to other maintenance companies. Maintenance business generates low margin revenues and we want to focus on our core business. Latvian segment has generated 4.3 million euros revenues from real estate sale by selling luxury apartments in the River Breeze residence, which is less than 1. As we are talking about luxury product, the sales speed is not the same as for middle class residentials. Rental and maintenance business are insignificant in Latvia. In Lithuania, we see significant increase in real estate sales revenue due to completion of 5 new buildings in Šaltinių namai Atiko project in June. More than 80 apartments have been handed over to the clients by today, and less than 30% of the apartments are still available for sale. In Germany, we are operating a hotel in Bad Kreuznach. This year started slowly, but the sales were picking up during last 2 quarters and reached the same level of revenues as in 2018. 96% of our assets consist of real estate portfolio, which include inventory, 21%, consisting of premises ready for sale and properties under construction. Investment property, 71%, include and our main project rental property of T1. Paul will give you later more thorough overview on all the projects. The rest of our portfolio include German hotel property and Tallinn offices. Our equity ratio at the end of September is 40.16%. Our debts consist of 67% long-term portion and 33% short-term portion. Total assets have increased by 16.5% in 1 year. Main portion of the current assets consist of the inventories, which decreased by 10% over the period. As I mentioned before, we recognize two kinds of inventories: premises for sales, which include properties in the Baltic capitals, and premises being under development. We are actively developing the inventories. When we are actively developing, the inventories are increasing, and when premises are sold and handed over to the clients, the inventories are decreasing. Non-current assets have increased approximately by 40 million euros, mainly due to completion of T1 Mall of Tallinn project at the end of 2018. The increase is resulting from capitalized cost of construction plus revaluation effect at the end of 2018. According to independent valuators' valuation, the fair value increased by 18 million euros. Non-current receivables increased by 3.7 million euros, consisting mainly of two components. 2 million euros deposited on a separate account to secure T1 related interest payments, and the rest is accrued income related to implementation of IFRS 15 related to rental income in T1. Total liabilities have increased by 17.5% in 1 year. Our debts include bank loans and bonds. For development, we usually use bank loans, mainly for a short period of time, 1 to 2 years. T1 development is an exception due to the scale of the project, and the financing was agreed for 5 years period with end term at the end of 2021. For corporate purposes, we have issued 3 kinds of bonds: convertible bonds in 7 different issues. They mature, and investor may exchange the bond into the share of the company at the price of 2.8 euros. Remaining balance of these bonds is slightly above 10 million euros. Usually, investors prefer to prolong the term by another 2 years at maturity, not to redeem. Historically, none of the bonds have been exchanged for the shares. We have also non-convertible secured, callable 8% interest rate bonds which mature on 1st of June 2020. And last but not least, we have had non-convertible unsecured bonds which all matured during 2019. Half of them were redeemed in April and the rest in September this year. Custom advances are related to pre-sale agreements. We usually collect 10 to 15% prepayments upon signing pre-sale agreements. Current payables are related to our active development activities and large construction invoices. Other non-current payables are usually related to guarantee amounts withheld from construction invoices. Depending on the timing, they might be reclassified also into current payables. The company has issued close to 57 million shares with a nominal value of 20 cents each. The registered share capital of the company is 11,337,590 euros and 80 cents. The company has collected 5.7 million euros capital over par value and has formed a statutory reserve of 1 million euros. Revaluation reserve is related to German hotel property. The increase in value is not recorded through income statement, but through revaluation reserve. In case of an exit of the project, the profit from change in fair value will be recorded through income statement. Company's retained earnings are 74 million euros at the end of the reporting period. Kapital Grupp has a potential possibility to distribute dividends without income taxes payable. This reserve consists of historical dividends received from Latvian subsidiary and undistributed paid-in capital into AS Kapital Grupp. The total untaxable potential distribution constitutes 122.6 million euros, which gives us a contingent tax asset of 30.6 million euros. As you see from illustrated slide, our normal activity shows negative cash flows from operating activities. During active development phase, also financing cash flows are positive, like you can see in 2018. In 2019, we have repaid more loans than taken. Our operating cash flow was positive during 9 months. but 3.2 million euros less comparing to the same period in 2018. Cash from investing activities have shown a significant decrease as the main object T1 Mall of Tallinn Shopping Center has been completed in 2018. Thank you, and I will now hand you over to Paolo for the update on our operations.
Thank you, Angelica. I'm glad to share in more detail how we are progressing with our residential developments in Tallinn, Riga, and Vilnius. As I told you before, we can now start the construction of Kalarana Quarter in Tallinn. The total area of the quarter will be in estimation around 39,000 square meters and 12 4 to 5 floor building that we can build in 3 phases. By the end of the first 2 phases of construction, in estimation 31,500 square meters will be developed. This means 8 buildings with the belonging landscape and coastal area, Kalarana Square and the park, and also 2/3 of the total volume of the underground car park with approximately 370 parking spaces. To date, we have already pre-booked 36.6% of the first 2 phases. Another truly significant development is Christine City in Tallinn. We have recently launched, it's called Resturi Houses, a former horse stable that will receive a new look and will be combined with the New Holland style building. There will be 39 apartments in total, and we have had an incredibly positive pre-sales, with 29 of those apartments being already pre-booked. In Christine Houses, we have already completed 7 buildings. 3 last apartment houses will be completed in November. In the 3 last houses, out of 92 apartments in total, we have to date sold 81 and pre-booked 2. At the end of the last reporting period in July, I share our insight on each Baltic market. As I then mentioned, out of the Baltics, Latvian real estate market is currently the most challenging, not just for ProCapital, but everyone. Thus, it is very positive to see that the total sales of River Breeze residences are exceeding 7 million with 450,000 euros in Q3. As highlighted before, the River Breeze residence received the 2019 Architectural Award, which is one of the most prestigious awards in Riga, recognizing the balance between private and public outdoor space in an exclusive and innovative housing project. At the end of September, the local planning of Kleiner Sala area that had been in progress since 2016 came into force. This means that we can proceed developing the Kleiner Sala quarters and an integral area in higher volume than it was initially planned before. Houses of Shaltinio-Namai Ad. Should you have any question, I will be happy to discuss further.
Thank you, Paolo and Angelica. You can now ask questions and you can write them on the question box. I will read them out and hand over to either Paolo or Angelica for answer. We actually had a couple of questions beforehand, so before we go through the questions that you now ask, we go through them before that. So the first question that we received was, which is the update on refinancing? At last quarter presentation, ProCapital was in active negotiation with banks. There have been no news on that. When does ProCapital expect to close the refinancing deal?
We are in progress with different possible solutions. We are not yet ready to give public information about that, above all due to the fact that we are in negotiation. But we hope soon to have some news.
Thank you. Another one was received with regards to T1. At a recent interview, Allan Remmelkoor mentioned that T1 is looking for options to better connect to Ülemiste railway stop. When does ProCapital expect the construction to be completed? And there is also a personal comment on that. I think this is a major architectural mistake not to have planned an all-weather a walk through the shopping area between the tram stop and train stop. This would add a nice flow of people as well as the incidental shoppers and the entry from Ülemiste train. Also attract visitors from Ülemiste city and mall to have a look at T1.
Well, I can say that we are in progress with the projecting, and I hope soon to have the solution ready to start with the construction for this interconnection. I do agree with the person that is saying that this would be an important matter, but definitely I have to say that I cannot blame the architect and the management of T1 not to have before thought about that, because all the logic of such a big shopping center are logic that you are seeing during the operation of the shopping mall. So many things definitely has to be changed during the life of the shopping mall. So, but soon I think that we will also be ready with this new entrance.
Thank you. And the last question that we received was, what would be the estimated rental income from T1 at full occupancy?
We usually do not disclose any information with future or forward-looking prognosis. So we decide to continue the same politics. Thank you.
Another question that we now received, I will read it out. Beside interest payments, how does T1 operating result compare to Expensitio? I don't quite expectations compared to expectations. Yes, thank you for correcting.
Well, I have to say that the operational is more challenging than my first expectation, but this is something that anyway is in the life of this kind of business, and then I'm looking for a future, and I know that the management of T1 is working very fit as best as possible the situation, and also I think that they are really looking for some activities they will give a good result in the future.
We will give it a moment to have any further questions, but at the moment it seems quiet. Nevertheless, should you have later on questions, then you are more than welcome to send them. I will remind you that the presentation will be available shortly in our webpage and also on the Nasdaq Baltic YouTube channels. Thank you for joining us, and have a wonderful day.
Thank you, everyone.